Welcome to FinTech Confidential, bringing you the people, tech, and companies that change how you pay and get paid.
Especially on credit cards or prepaid, everyone's basically fighting with the same fixed pie. Convert this into a points currency and no one knows what it's worth. We just wanted to make it super simple. The mission of Neo is really to build a better financial future for Canadians, challenge the status quo, increase competition in the banking sector in Canada. How the heck is Canada in the bottom 5 of the developed world in digital banking? We're top 5 in education, smartphone penetration and internet usage, private banking experience that the 0.1% of Canadians enjoy, and giving it to the 99.9% by leveraging AI. That private banking in your pocket, oftentimes, especially when you're building companies, those things that really suck in the early days, early engineering decisions end up actually either really helping you or really hurting you. Canada's an interesting market. If you look at the addressable market per fintech, Canada's actually what are you signing up for? How does it work? How many Americans and Canadians don't really understand credit in general? I actually took the terms and conditions from the big banks products and I ran them through ChatGPT, and it basically came back and said you would need to have we've made ours so that when your bill is due, it takes 2 taps. It's just so basic.
Here's a quick message from the Accrued series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out loanpro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. Welcome to Accrued, the FinTech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, optimization, modernization, and personalization through insightful conversations with the industry's best. I'm Ted Huff, and with my co-host Colton, we'll be guiding you through the intricate lending world. Whether you're deep into lend tech or just intrigued by how the technology is reshaping lending, you're in the right place. And now, let's dive into another episode of Accrued. Colton, welcome back, man.
Ted, good to see you again. Thanks for having me. Excited for today's episode. We've now had one conversation focused a lot on Canada, and excited to dig in a little bit deeper today on all things fintech, but also the Canadian landscape too.
It was great having Tao on, and I'm looking forward to taking this another step. It was kind of funny when I first launched FinTech Confidential. One of the comments I was asked is that, are you a Canadian FinTech podcast? And I hadn't even thought about it, but the first 7 people, I think, or at least the 7 within the first 10, were all Canadian FinTechs. So I'm excited to re-jump back into this.
Yeah, let's jump into it. Excited for this one.
We're really excited, actually, to welcome Jeff Adamson, a former Canadian wrestler. I'm from Iowa, so I hear wrestling. Dan Gable is the man in that space, so it made me think about that. But today, he's the co-founder and chief commercial officer at Neo Financial. Now, Jeff also co-founded Skip the Dishes, one of Canada's most recognized consumer brands. It is like my favorite, DoorDash here in the US, but in Canada. After he left that, he decided to hop into the financial side of the house with Neo Financial. And under his leadership, it has grown into offering integrated financial products that cater to modern financial needs. Neo's technology is building more rewarding financial experiences and empowering Canadians to take control of their future. It's also been recognized as Canada's #1 startup by LinkedIn for 2 years in a row, working with local retailers, large enterprises, and financial institutions to transform the future of financial services. And Jeff is here today to share his journey and insights on how the fintech game is changing and how Neo Financial is powering it. Jeff, welcome to the show, man.
Well, it's great to be here, Ted and Colton. And if you spoke to 7 fintechs, I feel like you may have gotten them all. So this is maybe last but not least.
No, definitely not. There's way more than 7. I am just amazed by how much innovation in fintech that comes out of Canada, and I'm excited to learn more about Neo today.
Well, it's funny. We were talking to an investor, and Canada is an interesting market because a lot of people look at it as a relatively small market, but from a percentage of GDP, banking is a massive market in Canada. But if you look at the addressable market per fintech, Canada is actually the 5th largest in the world. The US is actually like somewhere around 25 or 30. So it's a huge amount of market for each fintech in Canada to go after.
Why is there less competition in the Canadian market relative to somewhere like the US market or other markets?
There's a number of different reasons, but one of the big reasons is we don't have the same infrastructure for fintechs to build off of in Canada. And so if you start up in the US, you've got Marqeta and Galileo, and you've got all the classic players like the TSYS and the I2Cs. The offerings that those companies have in Canada, and also the banks that are willing to kind of compete to sponsor fintechs, it's just totally night and day. You know, in the US, you'll have like tons of different offers, and you can have multiple banks trying to be your sponsors, whether that's for a BIN or the MasterCard license or balance sheet. Same thing on the infrastructure side and processing, like lots of companies will compete. Canada is just not the same. Like you're lucky to get a phone call back if you're starting up a fintech. And for us, it was a real slog, even just like getting meetings with banks to even start up Neo in the early days.
There's really a handful. When I say a handful, I'm probably being generous, of banks that do any banking as a service sponsor banking activities, right? Like very few relative. I mean, we're seeing some of the regulatory effects in the US market, right? But I agree. It'll be interesting to see where Canada goes from an infrastructure perspective, from a bank sponsoring fintechs to be able to drive more mass adoption of products that are needed in the market.
Like when we were starting up, we tried to get the meetings with some of the big, processors and kind of the incumbent fintech companies that you typically would kind of use to build your fintech. And a lot of them we couldn't even get a meeting with. They wouldn't even return our calls or emails. And that's part of the reason why we built the majority of our tech stack in-house. I just see that, oftentimes, especially when you're building companies, those things that really suck in the early days, where you're like, oh my gosh, like why can't we just like take some technology off the shelf and then put our own UI UX on top of it and we'll get to market a lot quicker. It's a lot more painless than having to build it yourself. But then longer term, a lot of times those early engineering decisions end up actually either really helping you or really hurting you longer term. And I think now we're starting to see that while it was painful to build a lot of our own infrastructure, now that we're almost completely vertically integrated, it's just been such a huge, I think, a tailwind for us.
With you going through all these different things and struggling to get those meetings, as you had mentioned, what would you have done differently in starting Neo Financial that maybe you learned after the fact?
Oh gosh, Ted. I think it's so tough. There are so many things because you can divide it by like people, technology, process, fundraising. I'd say on the people side, having maybe deeper domain expertise earlier on, I think would have been pretty helpful. And then also I think especially like even the credit risk side of things, like having like someone who we can really grow with and kind of be that first credit risk person, and then have that same person be the person who is still with you when you've got like 1 million customers and billions of receivables. Those are a couple areas. And then also like, who are your investors along the way too? Like, do you have the right investors that are going to be able to fund you through multiple rounds? And are you going to be constantly looking for net new ones? And there's a lot. And frankly, there's no like single one. It's just probably like hundreds of smaller decisions. I think we made the big ones. We did a pretty good job on the big decisions. Sometimes you look at a lot of fintechs some will start with deposits as their core business, and they'll be like a prepaid company with a lot of features around it. We started with credit card, which was really painful and hard to start up, but then it starts to really pay off, like 2 or 3 years into the business.
On the people front, Jeff, you bring up a good point. Our last episode, Chloe mentioned that in the medical field, if you're doing a medical startup, there's always a chief medical officer. peeking at your background, I think you had one of the coolest titles of chief restaurant officer at Skip the Dishes. But like, it's not common practice in an early fintech to have a chief financial services officer. And the point was like, hey, oftentimes having someone with that level of expertise within the business to be able to marry with other unique perspectives too is helpful.
I think you got to be careful giving away C-level titles early on in a company because, in 3 years, the company is going to look very different. I think it's a common mistake that companies make. We're actually at the stage right now where we are placing a lot of executives, but like we're north of 100 million in revenue. So it's like, I feel like we're at that stage now where we have a fairly good idea of who we're going to need over the next 3 to 5 years. So like we're hiring a chief lending officer, we're hiring, a CFO and chief legal, because that we have a lot more clarity now. But like in the first year or two, like I don't even know how it would be possible to know like who do you need your chief legal to be or your chief growth officer to be at that stage. Even my own, like I didn't have a C-level title in the early days. It was just your chief dishwasher, CDO.
Let's unpack a little bit the regulatory environment. Like, what are you seeing in Canada? We talk a lot about it on the US side, but what are you seeing in Canada?
Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
It's absolutely wild. I think it's probably one of the most exciting times to be working in financial services. And I say that because we're just seeing this massive application of new technologies to an industry that's typically shunned technology. Now, a lot of people in the banking sector will probably hate me for that. Maybe some people will agree with me for that. Even if you look at historically, financial services as a sector, it is the most valuable sector in the world, trillions and trillions of dollars of market cap, but it's valued at almost the lowest of any industry in the world, less than one price to book. So essentially the capital markets are betting against financial services to the tune of trillions of dollars. So even like at a price to book ratio, it's lower than utilities. Yeah. And the reason why cap markets are betting against it is because they do not believe that financial services has a future-proof business model. They're not confident that financial services is going to transform itself and that it most likely will be disrupted. Whenever disruption happens, it's usually because new business models, new technology. And I do think we're seeing that now. It's highly regulated. And so it's more difficult for that disruption to occur. But the regulators are now waking up to the fact that they have to change, they have to account for all the new ways. And frankly, I would prefer that innovation occurs on the technology side rather than having the smartest people in your company trying to figure out how to work around regulations. Mm-hmm. I'd rather them actually have modern regulations that account for the new world that we're in. Yeah. And then you can spend more time focused on the customers themselves.
One of the things that is kind of showing the continued drive forward in the regulatory space is definitely the Retail Payments Act that came out, and November 15th, everybody has to be registered, and that's causing a slight bit of chaos in trying to figure out when and how and what. Do you see that type of regulatory change, although it's been talked about for a long time, but that type of regulatory change, how do you see it impacting Canadian fintech in general?
The Retail Payments Activity Act, RPAA, is a big topic amongst fintechs in Canada for good reason, because it's going to put, I think, a significant burden on a lot of fintechs. And I think some of the larger ones, we're fine. Like we have a lot of compliance. We have a lot of the talent internally. We've already been thinking about it for a long time. So generally, it's not going to be that bad. But the challenge, though, it's almost like no taxation without representation. It kind of reminds me of that quote, because It's like no regulation without access, perhaps. And so the challenge is that the access to the rails and the access to a real-time rail is still kind of date unknown. Mm-hmm. And so we're going to get regulated without really getting any benefit immediately. Now, the benefit, I'm optimistic it will come. However, that lag, how many bodies are going to hit the floor because of that lag between regulation and access? And I really hope that there aren't any really great fintechs where you've got all these people who are betting their careers and pouring their life savings into companies that now might have this burden and start having to hire compliance people simply to adhere to new compliance requirements before they actually get access to the benefits of regulation. But I do think it needs to happen, and I think we're excited to be on board, but we just really want the benefits to start coming.
Yeah. So on that note, Jeff, between the balance between benefits and regulation, ultimately regulation is there to try and drive the right impact and protect the consumer. Doesn't always necessarily do that, but that's the goal. At Neo Financial, you all have done a lot of things as far as market research on what products actually resonate to consumers based on the needs that they have. I'm curious your thoughts on differentiation in product that actually matters to consumers and what drives actual adoption from an actual building a different product perspective.
You absolutely have to be differentiated. And in Canada, most of the differentiation occurs between our banks just in terms of what color they are, red, green, or blue. That's like the difference. And I would actually argue, and it's funny, there were some big bank executives that went down to Silicon Valley, and they were shown a slide that had screenshots from their own websites of the banks, and they took out the colors of the banks and they took out the logo, and they asked the executives from these banks, tell me which bank is yours. And none of the executives could actually figure out which website was theirs.
Oh, wow.
Because they were fully indistinguishable. All the features were the same. The value props are the same. They're all operating on TSYS.
Yeah, they are.
So the underlying tech is identical. And that was part of the reason why the early engineering decisions we made were to really own the infrastructure, our own core banking system, our own ledger. Heck, we even brought our own processor in-house, and we cut over 1 million customers in a day without getting a single phone call from a customer. So hats off to our engineering and product teams.
Man. That's almost unheard
of. Thanks, Ted. I mean, just super tough. We got such a great team on the engineering and product side. And then also we became a direct issuer with MasterCard. So you have that freedom to kind of forge your own destiny. And so when we were looking at what do we want the value prop to be, it's like, okay, well, we can do whatever we want, really. And one of the things on payments, on the spending side, especially on credit cards or prepaid, everyone's basically fighting with the same fixed pie. They have interchange, and they're just like, okay, I'm going to convert this into a points currency, and no one knows what it's worth.
Yes.
And I'll maybe make some rules around it. Maybe they expire. Maybe you can only redeem them on, odd days or at the end of the month, the first of the month. And we just wanted to make it super simple. We wanted to make it personalized. We want to make it real time. And we also didn't want to be restricted to 1.5 or 2%. So we actually built a marketplace of thousands of retailers where they use Neo as a marketing channel. And then we give even more cash back, like 15, 20% cash back. And that cash back is personalized to the customer's spending habits. And so that then drives more cash back to the customer and then incremental sales back to the retailer. So it's a win-win for both sides. And the cash back is very straightforward. It's instant. And they can take it, they can put it into a high interest savings account if they want to. They can put it into investments. They can redeem it for different types of items and products from our shop. That was one way that we wanted to do it. And then of course the other way was, and this is, I know it's a long-winded answer, but it's a lot of what we think about, is how do we actually start making the products work together in a similar way that Apple's products work together. You can get an iPhone, but the magic really happens when you have a MacBook and an Apple Watch and AirPods and an iPad. We want the products to work together as an ecosystem does. And so if you have a Neo product, first of all, it takes seconds to get another product after that. But then the more products you have, the better the overall experience gets and the more valuable the value props actually increase. So the more deposits you have with us, the more cash back you get on your card. And now our customers can get up to 7% cash back. Actually, not even up to, they get 7% cash back on gas and their groceries when they're holding deposits with us, which is way higher than any credit card or prepaid debit in Canada.
One thing and central theme that I heard from that is how to drive simplicity in what you do. You brought up Apple and bundling products, but also Apple is best in class when it comes to simple UI and how it works. And there is a lot of complexity within credit card, and especially within credit card rewards. And some people have found ways to hack the system, and it's great for them. But for the normal consumer, it becomes so convoluted that it's hard to understand the value prop.
Well, it's not only hard to understand the value prop, it's hard to understand what are you signing up for? How does it work? I mean, how many Americans and Canadians don't really understand credit in general? I would argue it's a huge amount. And so what we try to do is we focus on transparency and simplicity. And just one example of this, I don't know what it's like in the US, but in Canada, and I actually took the terms and conditions from the big banks products, and I ran them through ChatGPT, and I said, what reading level would you need to have in order to understand, these terms and conditions? And again, you can debate whether ChatGPT is right or not. I didn't hire a person to do this analysis for me, but it basically came back and said you would need to have a post-secondary education to really fully grasp the terms and conditions of a basic financial product at a bank. We've made ours at a basically a high school reading level. We've made it so that, when your bill is due, it takes 2 taps for you to pay off your bill. And you know exactly what you're paying off. Is it minimum balance? Are you avoiding interest charges? It's just so basic, because we want our interests to be aligned with customers. We want them to understand, how do you build credit? We want people to use credit if they need it. But if they don't need it, I don't want them to just revolve on a credit line and rack up an interest if they actually, didn't need that. So right now, I would say the relationship that customers have with their banks is really predicated on the banks making money when a customer makes a mistake. We would rather that Neo profits when the customer does something that helps them. And it's hard for the banks to change their model.
I'd like to understand how Neo is helping users make those informed decisions and helping them only leverage, as you mentioned, the credit when they need it, not just as their primary means on a day-to-day.
Yeah, one example, Ted, could be if you look at
support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
Yeah, one example, Ted, could be if you look at APRs. So I don't know how it's done in the US, but in Canada at least, pretty much everyone is given, they don't have risk-based pricing for credit card products. So what that means is you have people being priced incorrectly. They're actually not pricing in the risk of that customer, and which basically means you have a whole bunch of people overpaying. You may also have a bunch of people underpaying as well, but what they believe is that it all blends out. What we've done at Neo is we actually have risk-based pricing where we actually look at the specific risk that's personal to every single different customer. And then we assign an interest rate according to that. And then that way, people are actually paying the right amount for the risk that we're taking to lend to that person. That's only possible because we built the technology in-house. I mean, another example could be we give free credit score monitoring to customers, and we also break down exactly what is the impact of different elements that go into your credit. Some are like a high impact, some are low, and they'll tell people exactly like which one and how they're doing on each one and what they can do to actually change it. I think it's still early days for us though, Ted. I think we still have a long ways to go, and it's pretty much a never-ending journey.
So for Jeff, one of the things you highlighted a little bit is how Neo and you generally think about underwriting and what that looks like, and different variables that you look at in the underwriting perspective, assessing how much credit limit should I give to this customer, and also evaluating that credit limit on an ongoing basis, and what should the interest rate be. How does Neo look at those decisions differently than maybe other folks or traditional banks?
So the leader of our credit risk team is the former chief risk officer from Nubank, Mexico. Wow. So he's someone that he actually took Nubank from 1 million customers to 7 million. In Mexico and many Latin American countries, you have a lot of thin file or no file. Yep. So what Nubank has done actually is quite exceptional. So I'd say that they're best in class. And so what William is doing is really coming in and building out that roadmap. I'd say today, we're still in the early days of really trying to be cutting edge on the underwriting side. And the reason for that, it's been deliberate, because when you're lending out the money, we didn't want to be like bleeding edge innovative, because then you have to make a lot of mistakes. And when you're making mistakes lending, they're pretty painful, as you guys probably know. So the number of different ways that we can, like obviously we do all the basics, we do all the things that everyone else does, but it's pretty much just like, let's do the basics really, really well. You know, let's obviously like look at both credit bureaus. Let's try to pull in some additional data sources. Let's have CLI, CLD, and account management collection strategies. All those things are all done in-house. Let's make sure that we're personalizing the in-app experience depending on where someone might be in their own delinquency journey. You know, maybe if someone's, you know, starting to become delinquent, like should we be pushing a loan onto that customer? Maybe not. So there's like some basic stuff that we're doing. I'm excited actually to see William and his team really start saying, hey, let's do some testing. Let's start pushing the envelope a little bit here, in a way that's safe and responsible, because we're not a bank. Like, we're not using our own balance sheet. We have a capital markets team, so we're leveraging balance sheets constantly, and I think we need to be very responsible in how we do that.
Yeah, that's it. Great point. One of the aspects, real quick, Jeff, how do you think about personalization and actually driving a personalized experience for your customers?
So the personalization we do is mostly, maybe it's a lot of it's on the payment side.
Yeah.
So like looking at people's spending habits, looking at, okay, what is this customer going to value? How do we drive more cash back to that customer? What retailers do we have in their neighborhood that we've partnered with, where if they were to switch from, you know, Walmart to a grocery store nearby, maybe they're going to earn 5 or 10% cash back. And then of course that's a win for the grocer who's nearby. On the credit card and prepaid and secured credit card side of things, we have that personalization that occurs where we're showing those customers merchants that we think they're going to like, and that we think is going to put more cash back into the customer's pocket. On the bank account side, it's still early days. Like we have everything from credit cards to bank accounts, investments, and mortgages. We're a mortgage lender as well. And so now really it's been a sprint to get all those products out. We're a 4-year-old company. And so it's been kind of getting that product parity so that we can really be this one-stop shop for customers. Now what we're focused on is, how do we start making these products work better together? How do we deepen the relationship with the customer and start the real multi-product strategy? And it used to take us 2 years to get to more than one product. Now customers are starting with more than one product. And so it's accelerating, but it's still such early days for us as a challenger bank in Canada.
Looking at all those different things, how are you leveraging emerging technologies? Yes, I'm going to bring it up now. AI, machine learning, to allow Neo to offer these personalized, these very specific products to your customers.
Yeah, I knew this was coming. I mean, you can't really talk about anything without. It's funny. There's so many memes going around too with AI. It's like tech companies calling themselves AI companies, and it's just like, putting like a veneer over something, and
Hey,
like
just
there was
add
one guy that
.ai to your URL, like .ai.
I think the domain AI, isn't that like Antigua?
It is,
like,
yeah. And they've seen a
didn't
huge
they, like,
boom in revenue
Yeah.
due to it. It's like that's like most of their GDP now. It's hilarious.
Yeah, it's just they're just rolling in it now. It's like one of the wealthiest countries probably. The one that I saw was like there was like a dead tree and all the leaves were yellow, and there's a guy going around with like a big kind of like a high pressure painter, and he's spraying all the leaves green, and the meme was, tech companies calling themselves AI companies.
I'm I'm gonna have to go find that meme. That's gonna be funny.
Yeah. So I think, listen, the mission of NEO is really to build a better financial future for Canadians, challenge the status quo, increase competition in the banking sector in Canada. We're in the bottom 5 in the developed world in digital banking in Canada. Like, let that sink in for a second. Like, how the heck is Canada in the bottom 5 of the developed world in digital banking? We're top 5 in education, top 5 in smartphone penetration and internet usage, and somehow we've just fallen so far behind. And so I think that there's a ton of opportunity to push the envelope on innovation. The future, the world that I see and where I think NEO will go in the medium term is this world where you have the private banking experience that the 0.1% of Canadians enjoy, where you literally just pick up your phone, you call someone, and they just take care of your banking for you, and you give a direct line to that person, and they've got your back. It's really taking that and giving it to the 99.9% by leveraging AI, that private banking in your pocket, and so that you can literally hand over the keys to your financial future to an AI that you can trust to go and start helping you with whatever job there is to be done. And whether it's, hey, AI, can you save me $1,000 over the next 6 months? And it's like, okay, I'm going to start taking part of your salary. I'm going to put it into a GIC or a HISA, or, you know what I mean? Like you can give it the jobs. And right now at NEO, we have ChatGPT integrated into the experience. And you can ask it basic questions about your own finances. You can say, how much did I spend on subscriptions last week? So we can kind of go and find you the information you're looking for. But we haven't yet handed the keys over to say, like, okay, now I want you to go and like cancel things for me or open new accounts for me. And I think that's really the next step.
Today, I was being asked about a good time for a meeting next week. And I really wish that my calendar, I could literally type in a prompt to say, and I'm on the Google Suite, and they still don't have this with Gemini, but give me days and times next week that I have available between this hour and this hour. And it couldn't even do, like, I probably spent more time trying to figure out how to use AI to get the answer than it would have taken for me just to look at it and type it up myself. But with that being said, I probably could have used a bit of advice on how to best do it. We always like to ask entrepreneurs, especially serial entrepreneurs like yourself, if you were to give entrepreneurs looking to dive into FinTech one piece of advice, what would it be and why?
I'll give you 3 words. Just do it.
Oh, nice.
I think that there's a lot of incredibly smart people who work in banks with a ton of great ideas, and they're absolutely trapped. And we just need people to start getting after it. And I think society will benefit from all those smart people actually taking risks of their own, as opposed to taking risks with other people's X, Y, and Z.
When I was in grad school, there was a faculty member that often said that there's a reason why there's no marketplace for ideas, because like you can come up with ideas, but it's all about how you action on it. What were some of the insights and learnings building both Skip the Dishes and Neo Financial that you take away on how to effectively execute, especially in those early days? Because it is very different than if I'm leaving a bank, going through the motion to starting something brand new from scratch. What are the insights as far as execution that helps that you've taken away?
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
I think the companies that have really good execution, it comes down to the culture that they built in those companies. It also depends on the stage of the company too. Like I'd say at Skip, we had quite strong product market fit early on. And then we had a pretty good idea about what we needed to do. And it wasn't like we needed to sit around strategizing. And we probably went overboard and over-indexed on this. Actually, I know we did. But we literally had a rule where it was like no meetings during the day. Because like, and so yeah, it was actually like, it was crazy. Like everyone was like literally.
I've heard of no meetings Mondays, but like not no meetings during the day. Like that's.
Oh yeah. Yeah. It was literally like, if you want to meet, do it on your own time. Like do it after work essentially. But like we literally built that business from zero to billions in sales in just a few years. Because everyone had a lot of clarity on what needed to be done. And you could execute really, really well in that environment. Financial services is a little bit different, quite a bit different. Highly regulated, like very, very entrenched incumbents. So I think strategy is also a lot more important. The consequences are also quite high. You're not dealing with like cold food. You're dealing with people's livelihoods. Yeah. So I think you do need to spend a lot more time being a lot more cautious and like figuring out like what is your strategy going to be, and then just clearing the path for people and getting out of the way and just basically saying, hey guys, like this is what we need to do. Like are we all on the same page? Let's start executing.
So I have to ask this: how do you balance the risk taking that is required to be a successful entrepreneur with that strategic planning to meet the fintech structure that has to be there? How do you balance the thought process of do it now to get it working and clean it up later, or do it the clean way the first time and maybe launch a little slower?
I think, once the company gets more mature, you can kind of start having frameworks. Or in the early days, you don't really have a lot of that. And a lot of it is based on, is the more you learn about the bet you're making, does your conviction grow? Or does it actually weaken? We were on a legacy processor for the first little bit of the company because the idea of building one ourselves, like we didn't know what the heck we were doing. Mm-hmm. But then you kind of then figure out pretty quickly, like, how are we going to differentiate ourselves if we're limited in the same way as the incumbents? So it's kind of just like a bigger strategic thought process where you're like, okay, longer term, we know for certain, with 100% certainty, we have to be differentiated from the incumbents. And we need to be able to play in the areas that they can't. And the only way that we're going to be able to do that is that by having truly differentiated technology. If we're on TSYS and they're on TSYS, they're always going to have better pricing than us. So therefore, we need to do these things. Yeah. That's kind of, I know it's not a perfect answer, but that's just a few examples of perhaps how I
love you using the TSYS example. I mean, I spent a number of years there and understanding and did a lot of work with folks in Canada. The market share that we had in Canada was crazy huge. So got to know that, got to know that market extremely well with that. But that's a good point. What you're talking about is it's okay to start with something to get the learnings and then move into taking it on yourself. And I think that's something that's super important because a lot of times I think entrepreneurs want to start at, I own everything, I control everything straight out of the gate, and then never actually get to their end goal because they spent so much time and effort there that they can't get enough momentum to carry them through. Yeah,
that's a good point, Ted. Like, you have to live to fight another day too. And you can't do just sitting around doing cool engineering and how are you going to raise your next round? How are you going to acquire customers? Like, it's got to tie together. I mean, we're just super fortunate at Neo that we've got a team that a lot of the folks we've worked with for close to a decade. They've been through kind of war with us already, and a lot of people who kind of have an understanding across the commercial side, across the technology side, and strategy and finance. No, we've certainly made tons of mistakes along the way. You've got the battle scars from doing those things.
Oh yeah.
You make bets that don't work. But yeah, I think you're right. Like a lot of people do sit around, they just think, hey, if I build it, then it will sell itself. Okay, well, no customer's really going to care about our processor or our ledger. They just want it to work.
So on that point, Ted, I think it's time to pull out. You got your crystal ball there. We always do this.
Of course,
you got it.
Of course, I pulled out the crystal ball. So Jeff, what I want you to do is I want you to look super deep, look really, really deep into the crystal ball, all the way here in the middle. Look all the way in the middle and look out 5 years and tell us, what do you see going on in Canadian FinTech in 5 years from today?
Wow. Well, that would be amazing if I actually could predict it. Okay, I'll try that. I'll give a couple. I don't like being in the prediction game, but so Canada 5 years, open banking is here.
Yep.
Ideally, it's rolled out, and we live in a country where customers can ideally seamlessly move from one bank to another bank, and where the customer really is in charge, rather than the bank being in charge. Where money can move freely and without friction and without fees, and where you will have a world where AI is actually doing a lot of the work for customers, and they are like able to hand over the keys, and that's going to then almost change financial literacy in the sense that you're going to be able to get someone to do a lot of the thinking for you, not the decisions necessarily, but someone who can do a lot of the legwork. Like my parents used to go and sit down and like go through their credit card bill one line at a time. A lot of people do that still, and just like making sure there's no mistakes. That's going to get done by any of the manual financial. That'll be all done in 5 years for sure. And Neo is going to be a massively profitable company serving 5 to 10 million customers. All these customers are going to be using multiple products and raving about it to all their friends.
Jeff, you bring up a really good point about automating financial services. And I spent 3 or so years at MX Technology talking a lot about PFM stuff. But the future truly is what you were talking about. The 99.9% of folks that don't have a financial advisor, that don't have that person that's looking at everything. How do you automate that? And how do you bring that to the masses that in turn drives better financial decisions? So I'm excited to see the direction Neo goes and where the industry, both in Canada and in the US, are headed according to driving greater automation within financial services.
Well, I think it's not just advice. I think it's actually like because you have wealth management and you have private banking. Yeah, how do you offer both of those things to everybody? The people who have private banking probably aren't the ones that actually need it. I mean, it's very nice for them to have. I mean, yeah. I've had it. I no longer have it. And when you have it, you're like, oh my God, this is incredible. Like, how did I live my whole life without it? But at the same time, like, I have an education. I work in financial services. I really don't need it. I'm financially literate. I think it's the people who need it the most. It's actually the furthest away from attainability for them. Technology is the great equalizer, and I'm really optimistic that that's going to happen in technology, or in banking, sorry.
Jeff, the insights you brought to the episode today were second to none. You opened my eyes with several insights on how commoditized a lot of the top financial services are and how to actually differentiate. So the insights you shared, incredible. And thank you for coming on the show with us today, Jeff.
Okay, super grateful to you guys, Ted, Colton. I really appreciate you and getting the word out there to people, spreading, increasing the level of education of people of what's going on in FinTech. I mean, it's absolutely essential. And yeah, keep fighting the good fight, guys.
No, thank you. I'll just say that going through this and having this discussion and doing the research on Neo, it was definitely eye-opening because of my experience in Canada, just to see how different you guys are doing things compared to everybody else. And I've got to applaud you for taking on such a big task and truly continuing to be able to move that forward.
Awesome. Thanks a lot, guys.
Well, folks, that does it for another episode of Accrued. If you've made it this far, go ahead, like, share, subscribe, all that fun stuff. And don't forget to sign up at FinTechConfidential.com to be alerted on your favorite episode coming up next. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to GetHawkAI.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.